All right. Good afternoon. It is Friday, May 15th. I'm here with Shane Force today. It's Friday, which
Yeah.
means that it's our day with Shane. So
Yep.
Shane, thank you for coming on with us today.
All right. Thanks for having me. Appreciate it, man.
Absolutely. I'd love to just, get an update on your end of things. I know you came on our ALC call yesterday morning, but there will be some people who are going to be watching on Facebook Live who maybe weren't on that call. So if you want to provide some updates from yesterday, that'd be great.
Yeah, just a good week for rates. Really, last week was really good for mortgage rates. We're seeing rates in the low threes, really pretty consistently over the past 3 weeks. We're seeing rates in the low threes for a 30-year fixed, which has been good for home buyers and good for people to refinance. We've been seeing some 2.99s I've been quoting for a 30-year fix, which is just you haven't seen that but a few times
On a
in
conventional
history.
at 20% down or 30?
Yeah, well, you probably need 30% for the 2.99, but yeah, just tremendous environment. We saw that in the beginning of March, and then towards the end of last week, I got back into quoting the 2.99 for the 30-year. We were at 2.875 beginning of March. That was kind of the lowest we were ever. Yeah, so we've edged our way back down there, and really the market hasn't done anything terrible, and really hasn't rallied on mortgage-backed securities. It's actually gotten a little worse over the past week, but servicers are more comfortable with the stimulus package and with the unemployment numbers, thinking they're not going to increase any further, and that they're probably going to get better from here on out. So that was really the issue, was that they were kind of, it was not good to have a mortgage in your portfolio 4 weeks ago, because they just were calculating how many foreclosures are we going to have. And now that we're kind of coming out of this, and county by county and state by state, we're opening up. So that's positive. And hopefully New Jersey and New York are probably going to be the last to do that, but you can just feel it coming.
There's definitely a much more optimistic, I feel like, mindset that people have been having
Yeah.
lately. And I think when you're talking about unemployment, I'm hoping that we've hit rock bottom on that front. So hopefully, to your point, as months go on, it's only going to get better, not continue to get worse.
Yes, you would think that's the case, that we are going to get better as far as unemployment is concerned, as things open up. I had a
Oh, yeah. Let's be realistic too, is that we are also talking about flu season being a potential threat. And so making decisions and getting into action right now is so important, because if that does happen, we need to get another wave of work in before we would have to close down again.
Yeah.
So
correct. Yeah. So that's been on the positive end. I spoke to a customer yesterday, past customer, who was looking to refinance, and he's like, yeah, let's run the credit, let's run the numbers. We did that. Credit was good. And I found that he was in forbearance on his current home. And he was unemployed for 5 weeks. And he said, I was unemployed. I took advantage of that program and went on forbearance. And I said, okay, well, I can't do your loan until that's off of your mortgage, which could be 90, 120 days. You never know how long that's going to take to come off. So that's that is still an issue, that the banks are still saying, nope, if you're in forbearance, can't help you. And this guy's a 737 credit score, So now he's back to work. He's going to come off of the forbearance, and we'll see how long it takes. But that is still something that home buyers should know, that if you're in forbearance, it's going to be a stopping point to get a new loan. So you got to kind of get back on your feet, start paying that mortgage, and then it'll open up the door for a new purchase or a new refinance.
have you seen any of the creative financing coming back at all, or even a sign of it?
Doing a lot of co-signers, doing a lot of adding co-signers to the equation to help out, and had a lot of father-in-laws and fathers and mothers coming onto the loan to help out, and that we know the good thing about for a co-signer now is it's going to be a short-term commitment, most likely. Mm-hmm. And you're probably only going to be on there for a few months. Somebody gets back to work or gets back being paid full salary.
What does that look like when somebody does come off?
Yeah, you have to refinance. There is going through that and the costs associated with it, but at least you've gotten into that home and gotten to that, that property that you wanted.
Yeah.
But yeah, the refinance is needed to do it.
Okay.
Yeah, yeah. But yeah, we took a VA loan application last week, so that's something that we do quite often. I might do a couple of them, probably 2 a month,
Mm-hmm.
1 a month. I have a realtor in Passaic County that we do them pretty consistently with them. So in VA loans are pretty good. I mean, that was a little higher than the conventional rate. It was about 3 3/8, which normally it's been less, but the VA refinance, it's like you don't need much at all. The refinance with a VA loan is so nice. It's really no appraisal, hardly any documentation. It's really nice. So
Well, and the benefit of using the VA, I mean, just for somebody that may be watching that does not know about it, is it's a veteran loan, right?
what they're most famous for is a veteran loan. It's available for the veteran and their spouse, and you get up to 100% financing with no PMI. There is a funding fee, but it really equates to be so much less dollars per month when you compare it to like FHA or conventional with a low down payment. So it's a nice option. And the rates really have been lower than conventional rates recently, but just I think the Federal Reserve is just plowing so much money into mortgage-backed securities that has skewed that for the time being during the pandemic. So.
Well, and I would also say, Shane, we were on our ALC call yesterday, and we had a couple people, speak very highly of some of the transactions that you were doing with them. And I think, Mary Beth and I have talked about on numerous calls, when we're in the middle of a shift, opportunity comes out of that shift. And I think, as I hear you talk, you're very knowledgeable. You've been in the industry for a while. I see there being a lot of opportunity for you because of the amount of time you've been in the business, and you strike me as somebody who likes the challenge of of the moment. And I think that's something that I think will separate you, is that you seem like you're up for the challenge. You have creative options, and I think that's something that's very commendable and exciting.
Yeah, I mean, I've talked before, but we have pretty much a refinance database that over the past 8 weeks, I pretty much saw this the first week going into it. I'm like, people aren't going to get this the first time around, and they're going to miss the rate, and we're going to hit 3%, and then we're going to shoot back up again. And that's what we did. And so we started a refinance database, and we're just kind of like 1 or 2 customers every week. We hit your rate, we're ready to go. We're monitoring. You got to jump on it when it happens, because sometimes your rate is there for the afternoon and then it's gone the next morning. But yeah, that was something that I saw in previous markets, that when you're challenging record lows, you normally don't stay there long, So with this scenario, right, we're challenging record lows right now for some customers. Very, very good possibility next week we could be at record lows. And then, if we start opening up, what do you think is going to happen, right? If the economy starts opening back up, positive news for the economy is normally negative for mortgage rates, right? So you would think that rates are going to edge a little higher, maybe not, back up to 4.5% or 4% where we were in 2018, right? But I would think the government's going to keep rates low for as long as, unemployment being over 10%, we're probably going to have good rates, right? But we start trending back downward again, and you would think maybe we could very easily get back to where we were in 2018,
Yeah. People are going to either fall one way or the other through this. Either they're going to adapt the cutting the costs and being financially responsible and not wasteful and what's important, or the minute this opens, it's going to be like taking like an 8-year-old out of his house that he's been stuck in for a year and lingering candy out of the room. So with Americans, you're probably going to see quite a bit on that side.
Yeah.
So it's going to be interesting, and it's great that we have a relationship that we can get this kind of data with real time. And something else that we talked about on the call that I do want to make a mention, just because we are live on Facebook and everything, is that Shane has just a great reputation in the business. And so when choosing our financial partners, that was something that was really important. And I think that it's something to be commended, because I know that he does amazing work with the Bergen County Property Partners up in Bergen County, Al Donahue's Keller Williams offices. And he's got a great reputation there, which actually made it an easy decision for Bill and Ron to bring Shane and his force into our market center. And I just think it's a great partnership. So I want to just encourage people that who is on the bottom of your pre-approval absolutely matters,
No
especially in a very competitive buyer market.
Yeah, no doubt. Yeah, and if you're talking to a buyer, and if you're looking in Bergen, Essex, and most of Passaic, if you're looking, and most of those counties are pretty competitive, right? They're pretty competitive as in desirable areas. If that's the case, I can honestly say that a pre-approval from Atlantic Home Loans will carry more weight than the big four banks that you, because of our presence there. And especially if the listing agent is a Keller Williams realtor, they know us. They know us. We're in their office. We're at their team meetings, just like we are with you guys, and we're on their Zoom calls, just like we are with you guys. So, and that's what, one of the agents in your office had talked about this week, was that, there was a multiple offers, and the pre-approval was a pre-approval that I did for his client. And the offer, that was the deciding point. The listing agent was somebody from another Keller Williams office that knew me for years, and we had done transactions together, and we just said, yeah, that works. And I know that Shane's going to get the job done, and that's the deciding factor when you have 2 or 3 offers that are very even.
It is.
So yeah, we have those relationships with all those Keller Williams offices, and those offices, as you guys know, gobble up market share. I mean, they are just, most of them are dominating.
Yeah, Ridgewood's #1 in that county.
Correct. But if you look at each market center, like they're 1 or 2 in their area, right? I mean, each of those offices are dominating, or they're number 2 or 3, in their area. So that means something to a buyer who's going to be putting in offers, right?
Yeah. And when I sold, it really is, the offer is as good as this paper that it's on. If we can't get to the closing table and the funding doesn't come through, I have no confidence in that team. So just advice to everybody is make sure that there is a real relationship. That was a common conversation we had with Pat. I had with Pat this morning, in that she's got a great reputation with other agents, and how easy is it to do a second and third and 10th or 30th transaction, regardless of what brand you're at, if there's a comfort level of the efficiency of the professional on the other end of it. So
yeah,
we cannot go wrong with Shane from
yeah, and a lot of people, a lot of buyers, when they're looking to buy a home, they're focused on rate. Got to get the best rate. Sure, you got to get the best rate. When there's 3 other offers and you lose out because that listing agent had a horrible experience with that bank on the last 2 transactions that they were with, and they say, there's no way I'm dealing with that bank again. Forget it. The offer's very close. We're going with this other offer. Well, what good was that rate? You know what I mean? It didn't get you anything, because 100% of nothing is nothing. So I always tell people it's the whole package you've got to take into consideration. What's the reputation of that company that's representing you? That pre-approval is representing you just like your agent is. When you got 3 or 4 or 5 offers on a home, and seriously, now that we have such little inventory that people have taken their homes off the market, this is probably going to be a major issue when we open up. Is buyers are going to want to buy because they're renting and been locked in their house for 3 months, and they're going to want to get out there. Now they feel comfortable, and we might not have people listing their home as quickly as the buyers want to get out there. And that's what I feel like I'm seeing is once people go back to work, I feel like I'm going to be pushing the realtors to be like, hey, I need more listings, like get this market open. So we could have multiple offers and bidding wars in most desirable towns for the next 6 months. Pretty solid,
Like we said, real estate's local.
Yeah, so Shane, I know you had mentioned you got another call you need to pop on to. So I just wanted to close it out in the sense that is there anything else that you didn't cover today that you'd like to make sure our agents are aware of?
Um, I would just say, weekdays, weeknights, weekends, feel free to call us. We are still on, I would say probably a 35 to 40-day closing timeline is comfortable. Can we do a 30-day closing timeline? Yes, but I'm telling people right now, a 30-day closing timeline. Keep in mind that you have Memorial Day in front of us, right? So that's not really 30 days. That's really like 27 or 28 days when you have like 40% of the appraisers out there who aren't doing appraisals, right? So we've got to keep that in mind. And then right when we get past that, then we have the 4th of July staring us in the face, right? Those are normally big vacation weeks. I don't know if we'll see that this year, see too many people going away or going down the shore. I guess we'll see how that develops. But for a comfortable closing, I would say 40 days is pretty good right now. As far as where we are, as far as file loads, we're very busy. We have a lot of closings today. It's a Friday in the spring. But if you're saying, hey, how long till a commitment and closing? The comfortable scenario is 30 days for a commitment, 45 days for a closing. But I would say most of our deals are probably 40 days at this point. So if you're looking to structure a transaction, depending on the client, right? I spoke to a woman last night that Ronnie Iosa had referred to me, and we were planning out the closing timeline. And actually, Ronnie referred them because they're buying in South Jersey. So Ronnie referred them to another agent. And the agent said, well, can we close in 30 days? I said, he's pulling from his 401k and he hasn't started that process yet. So that's probably going to take a solid 2.5 weeks. So he's not going to have the money till the 3rd week, So depending on the deal, I would say that deal, yeah, we definitely need 45 days because he doesn't have the money. He doesn't even have the money for his, next deposit. So we've really got to plan that accordingly. So every deal is different, right? Every deal is different, but I think it's 30 days for a commitment, 45 is probably comfortable in this market for a closing time span.
Awesome.
Well, thank you so much for your time, and I hope you have a really great weekend, and we'll definitely be in touch with you next week and next Friday for sure, same time.
All right. Thanks, guys.
Thanks, Shane.
All right. Take care.
Bye.